Hello and welcome to another installment of Market Roundup for Saturday, February the 22nd. This is George from TRADEPRO Academy. We have a lot of exciting developments that took place last week, a bit of a volatile marketplace, and we stand today at a key pivot level. From here at this resistance in the equity markets, if we break higher, we're in uncharted territory, we're going bullish, we can resume the bullish trend, or some of the economic concerns that are coming to light might put some bearish pressure, and this resistance ends up being a third time resistance and pushes prices down as supply starts to come into the markets. All right, so we're going to look at the technical picture in just one moment. I wanted to start off with a bit of an extra piece in today's session this week. If you've followed the Wall Street Journal, it was a great publication on it today, and here's what it said: new view into Fed's response to crisis. The big news this week is the minutes from the meetings in 2008 were released. These were 6 private closed-door meetings that took place in the Federal Reserve with the discussion of what to do. All right, crisis, you got to remember, if you want to set the mood, this was a time of crisis. This was a time of the greatest recession since the 1929 one that was being mentioned in the past. So there was a lot of concern. There was a lot of doubt. There's a lot of shadow that was hanging over there. They had to act fast. And if you look at these minutes, there were over 1,800 pages of transcripts documenting the most turbulent time in history. And if you read through it, some of the key messaging for me was, what I took away from it was, indecision rather, uncertainty, and a lack of action. They seem to be chasing their tail for a good part, and there seemed to be one step behind in terms of their action plan. So that was an interesting thing for me. And I mean, if you picture yourself being in that meeting, a lot of crises in the markets, a lot of people relying on you to come up with a decision. They were relatively lighthearted about it. They were making jokes, some of them completely inappropriate, others were ill-timed with ill decisions. So Janet Yellen was also part of this. She wasn't Fed chairwoman at the time rather, but she was in on these meetings. All right, so some of the commentary is mind-blowing to say none the least. I would urge you to have a look at this, read the minutes, and make a decision on your own. How do you feel about it? Do you think the action they took was appropriate? All right, guys, I think they were a little bit behind the 8 ball. What they ended up doing is blowing up that balance sheet from less than $1 trillion to over $4 trillion where we stand today. All the mortgage-backed securities ended up buying, flooding the economy with currency. And the question today is, did it have an impact? Well, the stock market's up. It's at all-time highs. But how's the actual economy doing? And the stock market and the economy today stand divided. All right? The stock market is not an indication of the economic strength and health of the country. We have to know that. We have to accept that fact. In fact, what's happening, this free money that's been available is pumping the markets higher. Unemployment's still high. All right? New home sales are down. Jobs are pretty much next to nothing. There are not as many jobs. People who want to be working full-time or have part-time jobs, they're discouraged workers, and really there's a lot of disturbing trends in the underlying economics that's really outside the scope of today. I could talk on the subject for hours, as you can tell. All right, so what's coming up next week? New home sales. This is going to be interesting. We blamed bad weather for a lot of the economic releases, including the unemployment numbers a few weeks ago, and we'll see how new home sales did. So that comes out Wednesday at 10 a.m. There's going to be a little more attention to this than there has been in the past because of this weather report thing that they blamed it on. So Thursday at 8:30, we're going to have unemployment claims. This is a weekly indicator, and we look to see something around 333,000 jobs that were, or filed rather, people that filed for unemployment. All right, on Friday we're going to see preliminary GDP. This is going to be an interesting one. Would love to see if it comes out 2.6. My guess would be lower. And then we're going to end off the week at 10 a.m., the last release pending home sales. All right, what did we do last week? Some interesting things took place. Well, we had some FOMC meeting minutes, how the Fed has actually come out and said one thing that was very important. They used to say 6.5% unemployment is our target to start raising interest rates. Well, we're there today. All right, we're there today with a lot of people exiting the workforce. The question hasn't become, are we there? Because we are. We've hit that 6.5% unemployment rate. But the better question is, does that mean anything good for the economy? And the answer to that is probably not. There's still a lot of unemployment, a lot of people exiting the workforce. That's why the unemployment rate's dropping. All right, guys, you got to think critically and look deep into these numbers. You can't take them at face value. All right, so now they said, well, what else can we tie this entire success? All they're looking for is a measurement of success for their quantitative easing program. All right, and that's what they were looking for. The exit trigger was the 6.5% unemployment. Now they're looking for something else, and they're pointing their finger towards S&P 500. Interestingly enough. So who do they work for? Well, it looks like the markets. All right, unemployment claims last week, well, they were pretty much spot on. Existing home sales were lower, and that's really an indication of the unemployment scenario that we're talking about. It's not as good as people thought. Well, there it is. G20 meeting started as well on Saturday, today actually, and they're going to be going on, I think, until tomorrow as well. So there's the news. There's what's happened. I want to spend a little bit more time before we pull up the charts. And without further ado, let's look at the S&P 500. Okay, let's zoom out and ask ourselves, where are we in the overall, the broad trend? What's in play? Well, we're very close to the resistance level like we have been in the past, and what's taking place is a nice little retracement from there. All right, is it going to happen this time? Who knows? All right, technical analysis is 80 to 90% accurate, and trading based on technical analysis is 80 to 90%, but you still got to think about the 10 to 20% scenarios. So it's not good to bet everything you have based on those certainties. Just remember, keep in mind that recently, when it's touched this resistance line from this channel going down to 2009, the bottom of the crisis, until today, every time we've hit resistance, we've retraced or took a little pause at the very least. All right, we're at resistance level today, and more importantly, we had a double top formation here to start out the year in 2014. It broke this support level, the price tumbled, and it went to a 50% retracement on the Fibonacci from this previous move, all right, this previous wave higher. Well, here comes the question now. Is this now a triple top? All right, is this a triple top, or at the very least, is this a resistance that's going to bring supply in from overhead, and people who have been locking profits in since 2009, who have been accumulating profits rather, they've seen their really account grow and balloon into the profitable side. And the question about profits is the following. All right, guys, a profit is something you can spend. And if you have an unrealized gain in your trading account, you have to sell your position before you lock the profit, don't you? You can't sell, or you can't spend, you can't go on vacation on unrealized gains. You can't tell the travel company, well, I have $5,000 in a stock profit, let me go on vacation based on that. Right? You have to sell your stock to take profits, and if everyone starts doing it, that's what happens. All right, so that's the risk right now, is the supply overhead. We have a resistance at 1850. That's an all-time high for the S&P 500, and it's struggling at this level. All right, look at this. The candles tell us that we're going sideways, a little bit of indecision, and if we break below 1820 for this week, that's a great opportunity to ride some puts. Your first target would be 1775, and then down to 1750 and 1724 in the retracement levels. That lines up with the previous top, so it's a good news story there. All right, so that's our prognosis. Puts below here. If it break out to a new high, well, then we're going to get some call options. The one thing we need is high volume. But what's volume telling us right now? Volume is supporting the sellers, right? It's a supply volume scenario at the moment, so we feel good about those puts. So where are we going to put a marker? Well, very simply, we're going to put a marker in the following location to sell. We're going to have to take out some of these lows here. So around 1824 will be our trigger. Target 1772. All right, so stop loss up here somewhere. That's 1 and 2 units of profit for the 1 unit we risk. 2-to-1 profit ratio. Looks like a good trade. All right, so we'll keep you posted on that. That's what we think S&P 500 is going to do. In terms of moving averages, it's above the support level. This is a great indication. Long-term moving averages, we broke through it temporarily, but now we're back up. So it's actually acting sort of bullish at this time. Here's the interesting factor, however, the momentum indicators. Each time we hit a resistance, what do? They roll over, don't they? And in fact, here we had markets going higher, whereas we had the momentum measured by stochastics going lower. This was a bearish divergence. I warned you guys about this weeks ago on the videos, and sure enough, the market trapped and fell below that level to signal the completion of bearish divergence. Today, where are we? We're at the same resistance level. Stochastics are starting to turn, and if we get across, RSI is starting to look down as well. MACD slowing down. This momentum will confirm our theory for the downside, and then by jolly, we're going to have ourselves some puts down to the 1750 level. That's going to be some great profits. All right, that's what we see happening in the S&P 500. What's another likely scenario? Well, the following can happen. A lot of people say, are you bullish or are you bearish? And guys, remember, you can be both. You don't have to be bullish or bearish. There's a third alternative, is the sideways trade or the range-bound trades. So what we're going to do is buy puts here, target down here. If we see the price starting to turn somewhere in March or late March, early April, if it's down here and it turns, starts going bullish and we have bullish volume, guess what? We're going to buy some call options. We're going to ride some calls back up to here, and we're going to trade this range accordingly. So Don't try to decide whether you're a bull or a bear. Be right. All right? Just be right. That's what you need to be in the markets. And it's not one of those things where you need to be a hero or a leader. In the market, in trading, you're a follower of a trend. You are not a trendsetter. All right? Leave that to the tweeters, the twitterers, and yeah, there you go. You're not here to set trends and reinvent the wheel. All right, that's the S&P 500 for market roundup for the following or for the rest of this calendar year. We're going to be trading just options on the index. That's all we're going to do. In Market Analysis Live, which is our Sunday webinars, we actually go through and set up individual trade plans for 10 stocks, and we follow through with them. We do a stop loss, profit projections, money management strategies. We do all of that in a 90-minute webinar every Sunday at 8 p.m. If you sign up, you get the first month free. If you love it, well, the second month, it's only $50 going forward. It's subscription on a monthly basis. If you don't, well, that's fine. No risk, no credit card. Sign up, check out Market Analysis Live. Go to TradeProAcademy.com. We'll contact you, and we really think it's a great solution. We've had about an 85% return in 2013, and we're off to a great start in 2014 as well. If you guys have any questions, info TradePro Academy. We would love to get in touch with you. Have a good week, good trading, and remember, we're at a pivotal level. Where we go, the only time will tell, and we think before Wednesday we'll have some indication on the direction the markets are going to go for the next couple of months. All right, you guys have a fantastic weekend. We'll talk to you soon, and goodbye, everybody.